Welcome back to the channel. Today's discussion is not about short-term price action, hype cycles, or speculative momentum. This is one of those situations where Wall Street quietly adjusts its expectations, and most people don't realize the significance until much later. When large institutions revise their outlooks in a coordinated way, especially in the biotech sector, it usually reflects a deeper shift in how risk, probability, and future value are being assessed. That's exactly what's happening with Milestone Pharmaceuticals, ticker symbol MIST. Over the past few months, and especially in recent weeks, analyst sentiment has not only improved, but strengthened in a very deliberate and measurable way. We're going to slow everything down and walk through why this matters, what analysts are actually signaling, and why these changes are not random or emotional reactions to price movement, but instead reflect a growing level of institutional confidence in the company's future trajectory. The most important development comes from Wells Fargo, which has maintained its overweight rating on Milestone Pharmaceuticals, while simultaneously doubling its price target from $4 to $8. This is not a routine adjustment. A 100% increase in a price target reflects a meaningful change in how the firm models the company's future, whether that involves clinical progress, regulatory clarity, commercialization assumptions, or overall probability of success. Wells Fargo was already positive on the stock, but this move shows that their confidence has deepened rather than softened over time. Maintaining the same bullish rating while significantly raising the valuation tells us that their original thesis remains intact, but the upside potential has expanded. For institutional analysts, this kind of revision usually comes after reassessing multiple risk factors and concluding that the balance between risk and reward has shifted more favorably. What makes this situation even more compelling is that Wells Fargo is not acting alone. Around the same time, H.C. Wainwright maintained its buy rating on Milestone Pharmaceuticals and raised its own price target from $5 to $8, representing a substantial upward revision. At the same time, TD Cowen upgraded the stock from hold to buy and initiated a price target of $8 as well. When multiple firms, each using independent research models and assumptions, arrive at the same valuation level, it suggests a growing consensus rather than isolated optimism. This kind of alignment across institutions is often a sign that new information, improved clarity, or reduced uncertainty has shifted expectations across the board. Instead of analysts debating wildly different outcomes, they are converging on the same conclusion, and that convergence is often what precedes stronger institutional interest. This video is for informational and educational purposes only and should not be considered financial advice. Stock markets are highly volatile, and any investment decisions you make are entirely your responsibility. Always conduct your own research, consult with a qualified financial professional if needed, and never invest more than you can afford to lose. Looking back over the past year helps put this shift into context. Earlier in the year, H.C. Wainwright assumed coverage with a buy rating and a more conservative price target, while Wells Fargo initiated coverage later with an overweight rating and a $4 target. At that stage, the company's outlook carried more uncertainty, which was reflected in lower valuations. Since then, those early bullish positions have not only been maintained, but reinforced through higher targets. This progression matters because analysts rarely move aggressively, unless their confidence increases over time. Instead of seeing enthusiasm fade, we are seeing it strengthen, which suggests that Milestone Pharmaceuticals is steadily de-risking its story in the eyes of Wall Street rather than adding new concerns. At the core of this optimism is Milestone Pharmaceuticals' focus on cardiovascular treatments, particularly its lead drug candidate, etripamil. Etripamil is a calcium channel blocker designed to be administered as a rapid-onset nasal spray, allowing patients to treat episodes themselves rather than relying on emergency interventions. The primary target condition, paroxysmal supraventricular tachycardia, is characterized by sudden and distressing episodes of rapid heart rate that often send patients to the hospital. A fast-acting, self-administered solution has the potential to significantly improve patient quality of life while also reducing healthcare system burden. Beyond this initial indication, the company is also running a phase 2 clinical trial exploring etripamil's use in patients with atrial fibrillation who experience rapid ventricular rates, which represents a much broader patient population and adds meaningful long-term optionality to the asset. When we step back and examine the broader analyst consensus, the picture becomes even clearer. Based on the one-year price targets provided by 5 analysts, the average target for Milestone Pharmaceuticals stands at approximately $6.60, with the highest estimate reaching $8 and the lowest estimate sitting near $2. Even this blended average implies a massive upside from the current share price, well over 100%. The company also carries an average brokerage recommendation of around 2.2 on a scale, where 1 represents a strong buy and 5 represents a sell, placing it firmly in outperform territory. This tells us that while analysts recognize the risks inherent in biotech development, they believe the potential rewards significantly outweigh those risks at current valuation levels. To bring everything together, what we're seeing with Milestone Pharmaceuticals is a clear and measurable shift in institutional perception. Wells Fargo has doubled its price target while maintaining a bullish rating. H.C. Wainwright has raised its valuation while staying firmly positive, and TD Cowen has moved from neutral to bullish with a matching target. All of this centers around growing confidence in etripamil, its role in addressing unmet needs in cardiovascular care, and its expanding potential beyond a single indication. This does not mean success is guaranteed, because biotech never offers certainty, but it does mean that Wall Street increasingly views the risk-reward profile as attractive. When analyst confidence builds quietly and consistently like this, it often signals that something meaningful is changing beneath the surface. That's why Milestone Pharmaceuticals has captured renewed attention, and why it remains a name that institutional investors are clearly watching very closely going forward, that like button and subscribe.